Hello, Steve. Happy Thursday. How are you today?
Hey, I'm good, Seth. How are you?
I am terrific. All right, so got some pretty good news here. We're getting closer and closer to spring, even though it doesn't feel like it. It's been pretty cold out there these past couple of weeks. So we have seen a little bit of a slowdown just these past couple of weeks for buyers and sellers. Obviously, there hasn't really been new listings coming on in Metro Detroit just because these people we didn't really expect this crazy amount of snow and the cold and things like that. But as a nationwide and as the month goes, we are looking good. So new listings right now are up 8% year over year. So that's really good. And then mortgage purchase applications are up 9% from just last week. We're not really seeing that here in Metro Detroit, just because like what I said, but nationwide, that's what we're seeing. And then last week was, let's see what I have. Oh yeah, last week was due to the snowstorm. And then so I have another thing that I want to talk about. So you and I have kind of been ringing the same bell the past quarter about that people aren't moving kind of in this lock because of interest rates. So I kind of just wanted to show a graphic that kind of explains that. And they came out with a graphic showing what the mortgage rates is for homeowners like nationwide. So let's pull that up real quick. Do share screen. Okay. So this here is showing that. Oh, let me see. There it goes. Okay. So we pretty much have almost 79% of people that have a mortgage right now in the US is less than 5%. So you and me over the past quarter have pretty much been talking about how we've been kind of stuck in this lock and the inventory has been so low and there's people that aren't really moving. And this is pretty much kind of explaining why. So we're kind of hanging out right here in like the six area, right, Steve?
Yep.
High sixes this week. So you're
Yep.
talking about 90% of people have mortgage rates that are lower than this. So it takes kind of a lot of motivation for someone that's sitting right here, that in the 3 to 4%, to make that decision to sell their house and get rid of their mortgage at 3% and go to, even if they're downsizing, a smaller house at 6%.
Yeah.
So I hope that makes sense for everyone. So that kind of gives you kind of an idea of what we've been dealing with and why the inventory levels has been so low. I think I have it right here too as well. Let's see.
I think something that's important to note, with that 38%, that big percentage of people, is if you think about it, you're like, why the hell would they move? Like you have house prices are higher and the cost to borrow money is higher. So you're getting kind of this double whammy.
Yep.
But you have to, there's another factor in here that gets left out a lot, and it's the equity factor. So those people that took out those mortgages have just been sitting on their homes paying a good amount of money toward principal and have also seen their home prices go up 30-40% in some cases, right?
Right.
So even though the only way to unlock that money, because if you borrow that money on a home equity line of credit, you're paying 10, 11%. You borrow it on a cash out refinance, you're paying close to 7%. So that money is just stuck, right? So like, why would I, when you think about what would motivate these buyers to move, because that's what I get a lot is like, what do you think is finally going to turn them? Is it's going to be necessity. So they're going to need a bigger space. Or maybe they moved and they bought that house at the beginning of COVID when everybody thought that we were going to be remote workers for the rest of our lives. And now they've got to go back to work. Like you're seeing more and more large companies like, hey, we need the synergy. We need everybody in these offices, and the policies are getting more and more strict as time goes on.
Yep.
So while it does seem like why would they ever move, there is a lot of value in getting out of that and getting into something else, whether it be needing a different home for the size of your family, maybe wanting to unlock some of the equity that you've got there, maybe you're downsizing. There's all kinds of reasons
Hmm.
that still make sense to move. And when you look at what the rates are today and home prices compared to what you're leaving, you really have to kind of weigh it out and say like, hey, you know what, there is a reason to move, or hey, like let's just figure out a way to make what we have work, but there's more motivation there than you would think.
Yeah, exactly. And so this here is kind of showing kind of what we said, inventory levels over this is last year. This is January 23 going to December 23. So pretty much these last 3 months of or last quarter of the year, we're hovering right around 1.5 to 2. So in a normal market is like 5 to 8. So we were looking at really, really low inventory levels, and the buyers were kind of matching that. So that's why we're kind of even seeing a neutral market with such low inventory levels. But now what's happening is now that we kind of have been faced with this new reality where we know we're probably not going to get to those rates where we were a couple years ago, and people are starting to realize that and just kind of bite the bullet. If the inventories were to stay at that levels and buyer demand to go, it would just kind of turn into another spot where we're having bidding wars and things like that. And it's just, we can't say that's going to happen, but it could happen coming this spring. Would you agree?
Yeah. Yep.
Okay.
And, we're going to continue, just to kind of segue into rates, in the market. We'll, like I've said before, the way rates goes, it's not going to be just a straight downward trend. It's going to be one of these kind of up and down markets right now, because it's so dependent, especially in the beginning of the year. The economic data is wildly manipulated, especially when you're going into an election year, right? So when you're in an election year, your incumbent wants to show maximum employment, maximum growth, low inflation, lower price. They kind of want the best of both worlds for everything. So you're starting to see a lot of like a little bit more drastic market fluctuation. So, interest rates today, last week we're trading solidly in the mid sixes, right? 6.5, 6.625. We've seen rates move up about 1/4 to 3/8%. So we've seen rates go up to like 6.875, 6.9%. And that's just on the heels of a little bit stronger than forecasted economic data. So retail sales came in a little bit hot. People are spending more money during the holidays than the government thought they would. Far fewer people filed unemployment claims this week than they have in the past. Now, if you think about it, you're in the house, people put all kinds of stuff off for the holidays, and I know nationally it's a little bit different, but in Michigan, the holidays really start like December 20th, and they almost go through right now. And
Mhm.
that's because you go through all of the pre-holiday stuff, the holidays, going back to school. Your kids go back January 6th or 7th this year. And then now we've got another holiday. And then in this market, we've had, 2 days for cold days. And so you're really seeing a lot of people kind of put off filing for unemployment, and you're going to start to see some of these drastic changes in numbers. You're going to see some holiday layoffs, and there's different like cushions built into these things and the way this economic data reports. So it's really important if you're a home buyer and you got approved at 6.5%, and you're like, okay, this payment's cool. That payment might be 50 or 60 bucks more today than it was last week. And next week, it might be $50 or $60 less than it is today. So that's just the market that we're running in right now. So as a real estate agent or a home buyer or somebody looking into the market, there's two things you have to keep in mind. Number one, stay in communication with whoever's helping you with your financing. And number two, don't get too wound up either way. Don't throw in the towel. Like, I'm not looking. Rates went up, and then I'm not, because that once rates go up, it's kind of like the weather around here. It'll be a totally different thing tomorrow. And so we're just kind of watching some of these trends. Overall, the trend is trending for the better. We're kind of in this new channel where things are getting better. We just need to see really what the Fed's going to do next, and a little bit more of a solid approach from them. Like, we're getting Fed speakers that'll say one thing and then they're hawkish about something else. They're really, really trying to control the markets with these like random speeches and Instagram posts, which seems insane.
Mhm.
So it's just important, for you to remember, whether you're buying a home or you're an agent representing a buyer, hey, before we go look at these houses, double check with your mortgage guy. Like, I've got like 63 people pre-approved right now. I can pretty much tell, I know which ones of those they're color coded, who's payment sensitive, who's cash to close sensitive, who's this, who's that. And I know that on some of those that are real payment rate sensitive, I got to reach out this week and be like, hey, things are a little bit up, just so you know if you're going to look. But that's a nice way as a real estate agent to kind of keep your client in the loop and keep them free of surprises. And if I'm watching this and I'm a home buyer and I'm looking at getting into the market, I'm checking with the mortgage guy and be like, hey, where does this fall for me, or what does this look like for me right now?
Yeah. Well said. Anything else?
I'm going to leave this as a shameless plug. So I don't ever, like, I don't market it. I'm all referral driven and all that stuff. But if people that are seeing this video have done an FHA loan in like the last 30 to 120 days, reach out to Seth and have him connect us. We're seeing government loan rates are actually a lot lower right now. We're locking some of these FHA streamlines in some cases below 6%, and making people really happy. Like people that did FHA loans like 7.25%, we're saving them a bunch of money already, and can continue to do that as rates drop. So that's my shameless plug. Get with Seth. We'll connect and get you an idea of what it is. We don't have to pull your credit. We don't have to pop the hood and look at the chassis. We can just do a quick car wash and see what's going on. But it's worth looking at if you've made that move recently.
Perfect. Thanks, Steve. We'll see you next week.
You got it, man. Have a good one.
You too.